star-studded panel today. CIOs from the banking and the insurance sector. And a lot of things to discuss within 30 minutes, so let's get right into it. So Kenya has long been recognized as one of the technology hubs and one of the digitally most progressive markets in the region. But we are now entering a new phase of technology, where digital is no longer about mobile channels, but about platforms, ecosystems, cloud-native infrastructure, and AI-driven intelligence. So the first question I'd like to direct towards Alex and Nelson also, if possible. Across banking and insurance, we see API-led ecosystems are reshaping how the financial services are consumed. In some regions, we see the central banks or regulators coming in and regulating and enforcing regulations and mandates for banks to expose APIs and boost interconnectivity and innovation. How are you approaching open banking, embedded finance, and these external API use cases that are going across the world now and entering the region as well?
Thanks, and I think it's a very good question, especially looking at my age. I remember way back when I was a young boy, when I used to accompany my father to run play schools. I think banks used to open for 2 hours, 9 to 11. And you had to transact to your domicile bank, or if you had to, I think at some point of the revolution, whereby if you needed to go and transact in another different branch, you had to make a call, and at least to be called, the graphic, bank transfers, whatever it is to be called. And I think it was, or you had to pay a premium for that. And for me, when I look at the world now, I think maybe thanks to the devices we hold in our hands, it has been a revolution for us, so to speak. I think from a banking perspective, when you want to offer any services, customers expect to be able to get their services wherever they are. And of course, it doesn't matter across the globe. You can be a customer in Kenya, but whether you are in Zanzibar, whether you're in Madagascar, whether you are in Iraq or in the US, you should be able to access and enjoy your services. And I think with this, there has also been a lot of open space in terms of how do you operate, in terms of how do you build an ecosystem around different providers. So we have different players now in the market, the fintechs, the telcos, and even the banking ecosystem itself, in terms of how do we interconnect with each other. There's been quite an evolution around that. So that is why I think the API plays a very critical role in terms of how you're able to access our services. So from a Stanbic perspective, we've been able to open up our ecosystem through developing and deploying an API ecosystem, adapt to happening, also it's not like a marketplace there, where customers or even the ecosystem players, whatever it is, partner they want to work with us, is able to interpret. And I think for us, as a vision, going forward, is that for any system that we build, it has to be API ready, it has to be able to open up for the ecosystem. And I think, for me, that is the future, because at the end of the day, to be able to level the playing field, for us to be able to reach our customers and serve everyone, and for us to be able to be agile and innovate effectively, the API is again that we can launch right now.
I will probably just add on the aspect of regulation. So looking at the central banks, looking at the regulators, I think we're getting to a point where if we have standardized and open API systems, then it simply means all the ecosystems, whether it is in the government side, financial services, fintech, telcos, we have one standard language probably, then integrate all our systems within this various ecosystem. So, in my view, there needs to be some sense of regulation around this, and then standardization around this, and this, of course, now left our regulator.
Yes. Okay. Very useful insights. And also, I think security also will play a huge impact there. These regulations coming in and regulators saying taking the different security standards that needs to be this. And the next question I'd like to take to Nelson and Samuel as well. While there's a strong focus today on cloud native and WFIS architectures, as you mentioned, many financial and insurance institutions still rely on core systems developed decades ago. How do you approach the necessary decommissioning strategy for these systems? For these legacy systems, specifically, is your plan to go for a complete rip and replace that some entities do, or going for a digital wraparound mechanism around the existing core?
That's a very good question. Most of the organizations, I'm sure this is not a unique experience. Most of the organizations actually have used legacy systems that find very advantages that actually are applying to get that legacy system. And the new technologies that are coming, you are faced with a situation to try and convince the decision makers why you need to pick up the new technologies that are showing up in the market, especially in the area of AI and also the data analytics. It's a major risk. But there's a strategy. You need to think of strangulation rather than impact of the core system. When you look at these core systems, you realize that there is an aspect of completeness of meeting of the business requirements. And some of these things you cannot just overhaul overnight by moving the system. So I'll give a practical example. The field that I'm in, that is the insurance field, you find that you do not have many core systems in the world. When you have one, it's very expensive. So what have we done to augment this core system? We do a low-risk strangulation strategy. And one of the areas that we can easily start with is the area of data analytics. We find that we can easily get, I believe we run one of the latest data dashboards or interactive dashboard system that is you can find in this part of the world in terms of having interactive dashboards. And you find some of these core systems actually come with their own business intelligence systems, but you can easily plug in another system on that core system that can actually give you the requirements that you need. Another part that you can easily augment or extend is the document management. You find we have very, very good systems around for paperless. You can actually develop a paperless processing system that can actually be enterprise grade. And this system you can easily be able to extend a core system with this kind of systems. So for me, the strategy is try not to disturb the core. Use a domain approach and a phased approach to really replace the core system. Eventually, we'll be able to do that.
Yeah, so what, as WSO, we also welcome lot integration, so we also see that standardized approach followed a lot. So even if you replace your core someday, if you have your channels working with a standardized set of APIs and interface, then it will help you like a centralized and keep your day-to-day stuff running even though you replace core. Yeah, really good.
So maybe speaking from financial services, we actually look at this as a curse of financial services. Essentially, what happens is banks tend to be very early adopters of technology. So when a technology is just in its inception, then the banks are already consumed. Looking at mainframes, for example, in other than government universities, the early adopters of the initial computers or banks, which then means that you have the oldest version of any technology, and you build heavily on these old versions of technology. So what we've been going through is we realize that our systems that we cannot just rip off or rip out from our ecosystem, so to speak. And the reason for this is that there's already a huge dependency on that old technology, the legacy technology that we're working with. The solution recently, or rather in the near past, has been wrappers. So you have the middleware systems coming into translating from modern technology to the older technology in the back end. But even these, we are noting as technology advances, they are having their own limitations. So eventually, then we need to get to a point where even the back end is brought up to speed in terms of cloud activity and services. I know there are some spaces in Africa where common things is already moving to the cloud. We should be heading in that direction. So, but eventually, because we have very demanding customers, today's customer knows everything that they want. So if you're not willing to be as quick as they want you to be, as agile as they want you to be, provide embedded finance the way they want you to provide it, you lose out on it. So just anytime you see a technology person in financial services, show them some love. They're going through a lot. They're struggling with a lot.
Maybe I can just comment on the cohort systems. This is one of the biggest challenges we normally have in the tech space. Because you know that you inherited technology about 10, 15 years ago. So there are a number of considerations you have to put in place before you can make a decision whether to invest or to just have a layer around. So, for example, you have to look at the technology on which this particular application runs. If it's an obsolete technology that's no longer supported, and we know that it's not going to be supported, it's going to expose your organization, then clearly, then that's already a driver for you to look for replacement. There are also cases where you look at your business, then you realize that the kind of business you are running on this particular system, the customizations that have been made into this system to achieve what you're able to do, and the percentage of your business that runs using this particular system, let's say it's 80% of your core business, that's not a candidate for investment because it's going to likely disrupt your business. So then that's when you come in and see what exactly can you do then. How do you make sure that you are able to take it to the level where it's achieving almost the maturity level you want, but you are not disrupting the business. So I think there's a lot that we need to put into that.
Keeping the day-to-day operations running is priority for a bank.
Yes.
Yeah. And one other thing we see in that space is there are standards coming up like BIA that will act as a standardized layer within the bank or insurance infrastructure. And then once that standard is in place, later even if the core banking changes, still the standardized standard can be in place. Okay, we move on to the next question. The next question will be to Nelson and Alex if possible. What is your philosophy of balancing the adoption of new technology? So with the adoption of new technology, one of the biggest challenges we see is financial inclusivity with concepts like identity, modern experiences like passwordless authentication is growing across the world, especially in banking and the financial sector. So in the pursuit of giving better experiences to customers, sometimes you lose financial inclusivity. So how do you tackle that challenge on giving better experiences to users who can experience it but still including customers who don't?
So banking, we have two parts, so to speak. So if you're dealing with open banking, then you have more opportunity to provide this modern technology. If you're dealing with open source, also invest in technology. But now, the moment you move into the retail space, including a retail banking, you're actually forced to maintain, I would say, three categories of customers if you want to be truly financial, bring financial inclusivity to your customers. So you have your modern tech-savvy smartphone users or customers, and in this particular case, then you have the leeway to provide some other services in terms of enhancing the experience. So if it is anything to do with organizations, basically possible transactions, identity management, etc., that falls into this category. Then you also have these customers that definitely are in the mix in terms of modern technology, but they're not using the advanced technology. So we have this what we call kabambe phones. It's the older type of feature phones. They're not really smartphones. So in this particular case, then you will notice that any retail banking institution is maintaining the USSD aspect of transacting. So this now caters for those customers that are in between and they're not really consuming your higher technology, but they are still utilizing the digital aspect of banking as well. And then you still have a demography of a certain group of customers who have been banking since the 60s. They don't want anything to do with technology, they don't want to see anything that is technology-like. They are very comfortable coming to your branch, interacting with humans in terms of their banking needs. And the moment you try and provide a faster, more effective, more efficient way to bank as a customer, they'll tell you they're very comfortable with the branch. In fact, if you now get to understand this side of customers, that is the main reason why, despite digitization, you still have financial institutions operating physical branches in a number of spaces. So the aspect of inclusivity sort of forces banks to maintain the whole spectrum of these different services.
But still enabling the use cases for those who can experience.
I think that was a very good narrative. I think 10 years ago, at some point, if you were to have a state review of every bank strategy to be less digitized, then shut down all the branches. Incidentally, that was the buzzword that everyone was looking at it. But when you look at it in terms of the evolution and what has ended up happening, that we've ended up, of course, enhancing the branch network and, of course, investing also more heavily in the digital space, because I think it's important that you cater for the different categories of customers. We have USSD users in this market, quite a heavy use case. As you mentioned, there are people who just want to go to the branch, have tea, have water, speak to the branch manager and walk away. They're happy that way. There are those who are digital savvy, wants to access the app and be able to do that. I think when you look at it from the digital perspective, you need to be able to serve the needs of your customers. You need to be able to innovate across the different formats and say, how do I cater for this stuff? And I think at the end of the day, from a financial perspective, we must always endeavor and invest in how to manage the costs. I think costs are an important aspect in terms of banking perspective. How do you ensure that you provide as much financial as possible to the masses? Because at the end of the day, they're all going to go. You have to be able to reduce the cost of staff. That way, then it's very easy to be able to scale and be able to provide to different customers. But then, of course, the nuance in terms of taking care of different demographics, fix and dynamics of the customers comes in quite handy.
Okay, we'll move on to the next question. Next question is for Alex and Julius. For financial institutions in Kenya, cloud adoption often triggers debates around data residency, security, and regulator comfort. How are you structuring your cloud strategy? There are different approaches like hybrid, multi-cloud, private, and how did you convince your board and regulators in your decision?
I can start with that one. Before you can make a decision, you must have a business. You can't just jump into something because you have heard other people talking or being nice and all that kind of stuff. So for Jubilee, what we did was we started with the businesses, and we were in a very big transformation journey, and so we had particular decisions to make. When we were looking at the journey we were supposed to start, we realized that there was one major risk we had. The risk we had was that the data center we had was more than 5 years old. So we needed to replace it, to refresh the old data center. So for you to do that, it means that you have to again undergo a 2-year journey waiting to replace the data center before you can do what? You can start your transformation journey. So then you have now to look at the financials. Today, I was to investigate in a data center on-prem. It will take me 2 years before we stabilize it at a cost of maybe 1 billion, and you are not guaranteed of success. You can be successful or you can fail. The semiconductor devices worldwide, but then were not available because of the war in Ukraine. And then you also were looking at, after 3 years after that, because of technology evolution, we were again going to go through the same journey of refreshing the data center. So looking at the expected cloud expense and the data center expense, now we then knew that economically, from a financial perspective, cloud makes sense. But then there are also other things to look at. What are the risks involved in going to the cloud? So in terms of people, you have the teams that can help you to go to the cloud. And regulatory, you have all the regulatory safeguards to make sure that you are able to meet what the regulation requires. And then there is also the aspect of security. How secure are you going to make sure that whatever you are wanting to do is making sense? Then the other aspect is there any additional value you are going to get when you go to the cloud? You may not express in money terms, but you know that that's the right direction you're making. For example, the speed of innovation. So when we went to that, then we now went through the process of evaluating. Let me start with people. I can assure you that the biggest challenge I had, opposition I had on technology adoption was the tech, because it's a new technology going to the cloud, and they don't know what is expected. They are used to the data center, and they feel like they want to lose their jobs. So I had to get a buy-in in that particular aspect. So I had to take all my teams to be properly trained, all the certifications, and I can tell you after all the certifications that was done, they were ready to go. So that's one problem solved. In terms of regulatory, some of the data residents, so you are looking at, you do your assessments on PII, what is required, what is required on-prem, and what needs to go out of the country. You make sure that even where you want to take your cloud is a region that is what GDPR kind of compliance regulations. You don't take it to where you never do the data. So after doing all the analysis and you know that you're mitigating all those, then you know that's already closed. On the security side, sometimes we pride ourselves to be very secure if we are on. But then we forget that actually you get to get new technologies even when we are on the cloud. So we have to do an analysis of what exactly are we going to do on the security side. Beefing up the team that we have that is supposed to support our cloud journey, and making sure that we are going to use the right tools, and making sure that we have got the real-time observability on what is required, and that we have even done an analysis of how long it takes for me to patch the firewall. How do I get notifications and all that? And how many people do I need to use internally done? What happens if I go to the cloud and I'm using, let's say, a managed firewall? It means that I don't have to budget myself. All that I focus is on the rules and all that. So we did all that analysis and make sure that on the security side we are done. And then having the right implementation partner to help you go through that particular
particular journey. I can tell you that after we did all this analysis and the planning, we were able to complete the migration in less than 6 months. Thank you.
That's really impressive to do it in 6 months. Yeah.
Well, in addition to that, part of the whole buying, because you see, actually the language that one understands is strategies and policies and budget. So you have to be very clear on what is called the total cost of ownership for your account solution. And one of the things we need to do is scalability of your cloud resources. And then, of course, coming up with policies and strategies around that, which ones is all very
Yeah, that's another advantage that you can scale up to any level easily if you know the cloud as opposed to on-prem.
So I think maybe just, I think you guys have given us a master class on cloud adoption, which is not much more for us, but maybe I just wanted to, from our perspective, we took a hybrid strategy, and of course, some of the main concerns come through. I think initially when cloud first came in as a strategy, it was purely driven as save money, save cost, but then at the end of the day, I think for you to be able to make a financial sense, you look at it this year, because it doesn't necessarily mean that moving from on-prem to cloud is necessarily what it put as a direct translation. So you need to look at the business case in that perspective, and then of course the regulatory component in terms of the resident council, you take your whole bank into cloud or not. So you have to bring in the respective players from a risk perspective, from a regulation perspective, and whether it makes business sense. So for me, I think where we've seen a lot of benefit is when it comes to the digital space, where you need a lot of scalability, agility, adoption. Of course, we benefit from the security aspect that Julius has been able to play. So we're able to grow and able to expand as quickly as possible. So for us, I think what we've gone up with a hybrid strategy whereby we do maintain some of the workloads of them, and then of course where we need a lot of agility and ability to be able to manage and as quickly as possible, those are on the cloud. And of course, you have to balance the cost element of it because, as I mentioned, you might not necessarily translate it on the direct cost, and you need to look at what are the total cost of ownership and the benefit that comes there.
And I think really what I did even add is you again have to look at concentration risk. Remember, you're taking all your workloads and you set it into one service provider. What is what you are done? How you want to balance the number of the things you require? So going multi-cloud, if you want to go that, is also very key. Where you are able to say, maybe for OCI, there's a lot of these applications that to OCI. For Microsoft based, we take them here. For this one, we take them to this. For data analytics, we want to platform. So you're balancing and you're also getting the benefits from each of these that can make the business successful.
Thank you. So we are getting into our last question now. And I know most of you might be thinking, why is he not asking them about AI? So last but not least, we have an AI question. This to Samuel and Julius. Others also can join. So AI is rapidly trending across various industries. We see allowing organizations to offer more personalized user experience and boost internal workforce productivity as well. But when we see the financial and banking sector, we see like a lower adoption compared to other industries, and the financial industry is tiptoeing around it. They are doing POCs, they are trying different things, and where specifically is production grade AI currently delivering tangible, measurable value in the WFIS sector, and what's the future trajectory that you see for AI?
Yeah, so AI is a journey. If we were to speak about AI 5 years ago, we were at a very low level. Right now we are talking AI at a very different level. Let me give you our journey. So 5 years ago, we used to see over 100,000 pieces of paper in our company. And all those pieces of paper had to be captured by individuals with all the errors and turnaround times and all that. So then our first thought is, how can we use robotics to capture this data into our systems? And then at the same time, all our customers, millions of customers are depositing money to pay us from that office. And that money, as you deposit, I need to get a way of reconciling it to back-end systems. So So again, this requires accountants to do that. So we then, using robots, we were able to minimize the percentage of all these transactions, where around 95%, 88% of those are actually done by robots. So that's the initial phase of AI. We call it robotic process automation, RPA. And then now, we went to the second level where if I get an invoice from an account and the invoice, the way it was looking like, they changed the system and I didn't know they were changing the system. You know, the robot that I had initially will reject it because it will not understand this invoice. So what we did was to train our robots to be able to identify those invoices, all of those forms, even when the format changes. So that's the next level where it's able to know this is an invoice and I can see it from this particular. And then we also even images, you know, IDs. If the ID is changing or something is a driver license, instead of an ID, it's able to know this is an identified document. We call it intelligent AI. So we went to tele-automation in robotics. And I'm happy to report that like, last year we were able to save up to 100,000 man-hours. So we have to make sure that as we do this, we're able to measure the returns. It's not just the way of automating and we are happy, but you need to see what is it that is giving to the company as a return. So last year we over 100,000 man-hours savings. And now, what is coming up on the AI space? We already have done a POC, and now we are taking it to large scale, where all these emails we receive that come to our contact center, like the queries, from hostels and all that. Can I have a combination of robots and the large language models able to go in, read the emails coming in, and understand the context, extract the data in the images in that, and even log into the data systems, check if the member is covered, go to our knowledge base, check if your conditions are covered, if the price I've agreed with this facility is the right price, look at another conditions you have, and give me the clinical kind of aspect of the treatment if it's right. Is this drug the right drug for this particular disease and all that? So again, that's now the large scale phase we are working on agent AI, which is what I think a lot of organizations are talking about. That's basically the journey we want to do in 3 years.
Yeah, Julius has brought out the concepts. I think one of the things that we can explain for our audience is that when you hear RPA and AI, easily get confused. But see, RPA is a whole in which we not actually be able to do organism. But when you bring in AI, then you have the aspect of multiple. And some, just to make it very clear, is that some of the agentic LLMs actually is at the lowest level. But then as they go up, you get the agentic AI. You have frameworks like Gemini, that's what all the way to it's such a GPT, which is 5. Of course, whatever they give us here is way inferior than what is actually in the factories. So, what I'm trying to do here, because another thing that we are trying to figure out is what is coming for us. I see something actually listed. AI is coming from America, people are like the main one, 5, and China, another 5. But when you go to Europe, you go to Africa, it's silent. It's nothing. Which means that actually what we are doing is actually our experience was actually first we started with that, we were very excited. We really want to have this program help with taking quotations for emails and posting them somewhere for someone to do the analysis. In the process of doing the POC, AI and we realized that actually AI is actually doing like 90% of the work. It's usable, it can actually do errors, check, it can actually fill up errors that actually picked up a few of these solutions, especially in the way of one of the solutions that what I can say was that we will actually apply this the part of medical clinics. We are one model process. Actually, not really actually, a lot of time in the process, but probably an agent actually takes Microsoft process to store the output. Another area is on the quotation. We receive quotation from the market. This quotation is to get someone to down the process. But with an agent, they actually fix for processes and gives you a feedback and actually I think one of the things that I think that really we have to like is what are the others we end up calling that what is called form. So missing out. You have heard that Jubilee gathering is you want to do it. But you have to be very careful in your analysis to look at the parameters that you have to do. There are several parameters like volume, or exit. Yet, you understand the data that actually involved in the process and all that. So, this is a topic that we can actually talk about. Yes, but as the future unfolds, we are moving towards artificial intelligence, which is a 4 years or 5 years. And that would be a whole different pair of AI where AI is almost one but not yet.
I think we will wrap up. Our time is up. So to wrap up, today has made partly clear that era of like siloed institutions is ending, and the competitive edge moving forward will be not just the products that we build, but how seamlessly we can connect with Kenya's financial ecosystem. Whether through ATFS banking, open banking, AI, or robust CIM, our role is to now build bridges that drive national innovation.